Jurrien, when do we start to really care about what's happening down in DC? I read a quote over the weekend in Barron's, of all places. The market looks bulletproof. It makes me wonder.
Well, you know, the global cycle has been very positive, really, since the first quarter of last year. So it's been my position really for a number of months that we don't need legislative changes in Washington for this market to keep going. You know, the global stock market has really everything at its back right now. It has earnings are improving. You know, second quarter earnings are growing now at almost 10%. Probably will be plus 12 by the time earnings season is over. Valuations, at least outside the U.S., are reasonable. Financial conditions are easy. The dollar is down. The Fed is in do no harm mode. China is keeping things together after its massive credit impulse. So we don't need it right now. If all of that changes, maybe we'll need that extra boost out of Washington, but the market does not need it.
Jeremy Stretch, I want to talk about the dollar and the bearish mood around the greenback at the moment. I'm trying to work out where the inflection point will be, where we meet peak bearishness, if you will, around the US dollar. If a conversation shifts towards tax reform and tax cuts, is that going to change the mood a bit, Jeremy?
Well, I think it certainly could change the mood, and I think what the markets have been really concerned about is the lack of consensus in terms of the political environment in the US. And of course, those growth expectations have been substantially revised down because, of course, we're not seeing that fiscal reform that markets have been hoping for at the beginning of the year. So if we do see a change in the dynamics in terms of discussions about tax reform, then I think that could encourage the markets to believe a little firmer growth expectations are probable. And of course, that can have implications for both what the Fed does, but also importantly for the dollar. But for now, the path of least resistance continues to be a lower dollar. We're not in a disorderly correction yet, but I think what we're seeing is that markets are repricing interest rate expectations in other markets outside of the US. And certainly the discourse in Washington is not doing anything to support market rate expectations as regards the Fed.